good afternoon, or good evening, depending on where in the world you're joining in from today. I'd like to welcome you to the First Mining event, a fireside chat with Dan Wilton and Keith Neumeyer. Bit of housekeeping before we get started. As always, today's event will be recorded and available on both YouTube and Six.com by tomorrow morning at the latest. And following the chat today, Dan and Keith are going to be taking questions from you guys, the live audience. While we won't get to them until the end, questions can be submitted at any time in the Q&A tab on the right-hand side of your screen. But it's really my pleasure to introduce Dan Wilton, First Mining CEO, and Keith Neumeyer, the company's chairman and founder, as well as the CEO of First Majestic. So just to get us started, I know there's a number of people on the call today, as based on the registration, who are new to the First Mining story. So Dan, if you wouldn't mind, I think it'd be great if you could give a synopsis of First Mining and its two core projects.
Sure. Thanks, Romeo, and thanks everyone for joining us today. First Mining is a project developer focused on advancing two multi-million ounce deposits in Canada. Our Spring Pole Gold Project, located in northwestern Ontario, about 100 kilometers from Red Lake, one of the largest undeveloped gold projects in Canada, and advanced stages now of the environmental assessment process, targeting receiving its environmental assessment approvals in 2025. And our Duparquet Gold Project, located in the middle of the Abitibi Gold Belt in Quebec, one of the most prolific and sought-after mineral districts in the world. And there we have a resource of about 3.5 million ounces of measured and indicated and about 2.5 million ounces of inferred, and put out a preliminary economic assessment on that project late last year that shows, again, what would today be one of the largest if we're producing today, one of the largest gold mines in Quebec, producing in excess of 200,000 ounces a year. So major strategic projects. And on top of that, we've been blessed with a portfolio of projects that we have in First Mining by virtue of the foresight of Keith and the other founders of the company, who will talk about the history a little bit. First Mining, started life really in 2015 as a mineral bank. And Keith and the team at the time identified a number of, let's say, 20 plus gold projects. It's something like 20 plus, wasn't it, Keith, on the first list?
The first list had about 100 companies on it, and but yet we found at the time that it was the Canadian assets that were trading at sub $10 an ounce at that time. Surprisingly, some of the South American assets were substantially higher in price at that time, and we decided to focus on Canada, and focusing on Ontario and Quebec and Newfoundland and so on. And it turned out to be the right move, of course. And I think Canada, being a very safe jurisdiction, as we're seeing what's happening in South America, Mexico, Panama, and Peru and Argentina, they become very, very difficult jurisdictions to deal in, and Quebec and Ontario remain the two safest and I think best, from a permitting and just all around best places to be for a mining company.
Yeah, no, absolutely. So with the projects that Keith and the team had put together in 2015, 2016, we've managed to bring partners in on a number of those, so we can focus on what we think are really the two of the best development projects in Canada, in the world for that matter. And those other partners that we brought in have spent now probably $60 million plus on our partnership assets over the last few years. So just important to note, as we've brought in partners on those projects, we created a number of royalties, which we've been able to monetize, brought in shares and project interests of other companies. First Mining's been able to monetize some of those other assets to the tune of in excess of $50 million over the last 4 years. And that's directly gone into the projects that we have and really avoided shareholder dilution. So there's more of that to come. We've got a great suite of projects that we think are worth multiples of what we're holding them on our balance sheet. But that gives a bit of a sense overall of the First Mining story.
No, I appreciate that, Dan. And I do want to cut kind of straight to the protein today's conversation, especially for investors. So I'll throw it to you first, Keith. What do you believe really is the case for investors considering purchasing shares of First Mining today?
Well, I think you have to first of all look at the value of the company today. When I put the company together back in 2015, we went public in, I think it was April 2015, after, about a year's work putting the portfolio together. And just going to my prior point, we did pare that list down to 10 core companies that we targeted. And of those 10 companies, we ended up buying 8 of them. We've used a couple of those companies to sell off portions of them to finance our core assets. And, we were fortunate enough to get the balance of Duparquet, which in itself was quite the feat. One of the acquisitions that we made gave us a 10% holding in Duparquet, which is, this is a very large gold asset in Quebec, right off the main highway, infrastructure galore, water, power lines, near communities. It's the district, Rudy, is a mining district. They want this mine up and running. And we spent 7 years negotiating with the shareholders of this private company that owned the other 90%. And we ended up, Dan, was very diligent in working with the shareholders of that company, and we're successful in buying Duparquet, 90% of Duparquet. Unfortunately, what had happened, and I know shareholders are frustrated somewhat with the share price, but we did issue about 80 million shares to buy the balance of Duparquet. But if you look at a cost per ounce of gold, it was an extremely cheap acquisition, and you're buying one of the most largest and most undeveloped largest gold projects from Quebec, and we paid virtually nothing for it. And Dan can get into details on that. But what happened was, all of a sudden, all these private shareholders received the 80 million shares in their brokerage accounts, and then they've never had liquidity for the last 50 years, and they just blew their stock out, and the stock was cut in half within the next few months, which was unfortunate. And it was happened in a down market. If that happened in an up market, the market would have absorbed those shares, but it was just too much stock to come out. So that same stock is still circulating in the market. And I bought, a bunch of that stock myself, and others, my friends and family, and I know other insiders have been in there, trying to clean up the stock as well. So then we'll continue to do that. But it is a lot of stock that's floating around in the marketplace. So I think shareholders should be aware of that. So, that's one catalyst, when that stock finally does get cleaned up and get put in strong hands. And that's happening right now on a daily basis, because we know the buyers that are coming in and helping clean up the stock. We just recently did a private placement. We announced a $5 million private placement, and we had almost $12 million in demand. We ended up closing just around $11 million, which shocked me. And we had some really good brand new shareholders that came into this private placement that have been watching the stock for the last several years. And then because we're getting so close to advancing Springpole to final permitting, people are now, picking their heads up and, taking positions in the company. So, it does take time. This doesn't happen overnight. The resource market or the gold market's not exactly in a bull market right now. So, we are in a bear market. So it is difficult, for any company to, perform, as we'd all want it to be. But, we're on the right path. Permitting of Springpole is going very well. Development at Duparquet is going very well. And this stock will improve over time. I think we're at rock bottom, and I'm going to continue to buy, and I'm going to, help the company out as best as I can, as I always do.
Yeah, and I think the one thing I'd add to that, Keith, is when you talk about value, I started as a CEO 5 years ago. The share price today is half of where it was 5 years ago. When I started, and a couple of weeks after I started, the share price, not because of me, I don't think, but the share price had run up pretty substantially. I told Keith it was because of me, but actually, there were some other extraneous factors. You're sitting today. Remember that in 2019 we owned 10% of Duparquet. Today we own 100% of it. This is one of the largest undeveloped gold projects in Quebec. We're sitting today with Springpole, where we'll be submitting this year our final environmental assessment. That was 5 years ago when we were here 5 years ago. The amount of work and money that's been spent in study and understanding and moving forward on the environmental assessment process, on feasibility, the technical de-risking that's come out of this project, metallurgical understanding, engineering work that's gone into it, work with the communities around the project. We are so far further advanced than we were 5 years ago. And the gold price is $800 higher. And still, here we are with the share price where it is. It is absolutely irrational. And I've said to a number of shareholders and a number of folks who I can see have joined us on the call today that I've spoken to in the last couple of months, like, I've been doing this for 30 years. Keith's been doing it a little bit longer than I have. But I've never seen an environment where the disconnect in value between advanced stage developers and producers is this large. I don't think it's ever been this large before. So, that says to me that something's going to change. And we're maybe jumping the gun a little bit in some of the conversation, but, what's going to bring capital back into the sector? I think the gold price is going to help. But I think that first wave of capital is coming from inside the sector itself. Right. And Keith, you can speak to this a little bit later as, CEO of a producing mining company. And, I'm sure your business development pipeline's pretty full as you're looking at a number of different opportunities. Like this is a time when we're going to see the gold producers start to look longer term, because from where we are right now, I would estimate that if you just looked at the money that's been spent on Springpole and Duparquet over the last 10 years, hard dollars in the ground, and not a lot of that money was wasted, I can tell you. I think we're trading at less than half of the value that is just the money that you'd have to spend to advance these projects this far. So, phenomenal entry point for investors who are looking at maybe coming into the story for the first time or coming back into the story or looking to add on to their existing positions.
Appreciate that.
And going back to 2016, we did have a $600 million market cap. No one pulled off what I pulled off. I put together 8 companies into one, and I've never seen that happen previously. I've never seen it happen, since I did that. And the market loved it, loved, what we accomplished, and loved the portfolio idea. But unfortunately, mid 2016, the market just crashed, and we haven't seen it recover since. And today, we have a market cap of slightly over 100 million, but yet we've got 2, multi-million-dollar assets, and one is, way more advanced. We've spent, you've spent, Dan, 5 years of working with the government and the local communities to get this thing permitted, and we're getting very close. And we never know exactly when that's going to happen, and you can't really tell the world, the exact dates, and it's tough to be detailed. And I know shareholders always want to get details on that kind of thing, but I know that the energy is going into it, and then we're making very solid inroads. And in my view, both Springpole and Duparquet will be producing mines. When that's going to happen, well, I don't know, but at $100 million market cap, I'm willing to make that bet. And you get permits on Springpole, all of a sudden you've got a $500 million market cap. And then you get permits on Duparquet, you add that up again, and you have $1 billion company pretty darn quick. So putting timelines on that, I don't know, but I'll buy the stock at 12 cents all day long.
Oh, fair enough. And we are going to get to upcoming catalysts at First Mining just in a bit, but I want to pull back just for a second and kind of talk about the macro case for gold. Dan, I feel like we talked about this very recently, but I'm curious what you think investors should be on the lookout for this year when it comes to the environment for gold prices.
Well, so I think where we are with gold prices right now, those of us who followed the market for a long time, a lot of people were surprised that gold held in where it did when interest rates went from negative to 5% plus. If you look historically, you would have expected that in that rising interest rate environment, you would have seen a pullback in gold. You didn't, and you still haven't. In fact, you've seen gold, climb over $2,000 an ounce, and it's seeming very, very solid that it's sitting over $2,000 an ounce. I think building support for the next push up. And that push is going to come when they start dropping interest rates again. And we all know that's going to happen. Bank of Canada held rates today, but people are forecasting the interest rate, drop to start, whether it's March, April, May, or June. This is a near-term catalyst. A bunch of the professional forecasters that I've seen, are looking at gold by the end of the year somewhere. Some are saying 2,300, some are saying 2,500. I think that's not an irrational level, but I also think people need to remember, in the last cycle, say go back to 2000, 2001, and what that cycle looked like for gold. 2001 to 2011, the gold price went from about $260 an ounce to $1,900 an ounce. So you're talking about something that, we're not talking about a small percentage increase. You're talking multiples. And if you look again at 2015, which was really the bottom of the gold market in the sell down after 1100, it kind of bottomed at 1050 or 11 or from 1900 to about 1100, 1050, 1100. So in this cycle, I think we're really still only in the first up leg. And there's, not to mention all the macro reasons why I think you will have tailwind with gold from a geopolitical standpoint, not just from economics, but geopolitically. And then, what's going to happen with the monetary system. And ultimately gold playing a far more important role in settlement of trade between particularly BRICS nations, which are expanding and starting to take up massive percentages of global trade. So I think there's a lot more reasons to see gold going up than there is going down at this point in time. And, I think we very well could see gold at, $2,300 to $2,500 by the end of the year. And I think when it moves, it can move very, very quickly.
Talking about the gold price, at $2,000 gold, we've got pretty darn good gold prices today. And I believe in what Dan just said. I do, I'm a $3,000 gold guy, and I expect to see that, happen in the next couple of years. But I don't think we need that. What we need is sentiment to change. What drives markets are sentiment. Right now we've got money flushing into the NASDAQ and the S&P because that's where the money is being made. And over the last 5 years, everyone's been making a fortune, trading Tesla and trading Apple and Microsoft and so on and so forth. And as long as people continually make money there, that's where the money is going to go. And if you look at our shareholder list today and compare it to what it looked like, 7, 8, 10 years ago, I'm referring to First Majestic as well. There's very few institutions that are in this market. There's a couple specialty funds and then maybe some ETFs and so on, but they're very rare and far and few between. But though that money will come back into the sector once they stop making money in the major markets. And what drove the last major bull market, which started in 2002 and went for 10 years. We had a 10-year bull market from 2002 to 2012, and that was driven by the flow of capital that left the big markets that came into the mining sector because of the value. And there's the value is in the mining sector. There's no cheaper sector in the market today, and the institutions know it, and they are watching. I just came back from a road trip through London and through Zurich just a few weeks back, and I was quite amazed with the amount of people in the audience. And there's lots of institutions, lots of money, and quite frankly, a lot of young people, a lot of family offices starting to look at this industry, and it's there. It's just waiting on the sidelines, and they're waiting for the word go. And I personally believe that word go means when the S&P is down, 20%. And all of a sudden they say, oh, that all this money says, okay, that game is over. Now we're going to the next market. And the most undervalued industry in the marketplace is the mining sector. And all this money starts flowing into the mining sector. And we start another 5-year bull market.
And there's something, I've certainly noticed, I know investors have noticed too. It seems like in the last few years that really decent precious metal securities that put out great news are almost punished by the market for putting out good news. I'm curious to hear both your perspectives on how you think that's impacted First Mining and if that environment's likely to change.
I think kind of to Keith's point, when a number of the investors kind of left the industry in, call it in that period from 2012 to 2015, 2016. That capital flight makes other people at times when you have some surges of liquidity, look for liquidity, because liquidity's kind of come out of the market. So I think good news does provide opportunities where people say, oh, this should be interesting. I'm going to have more people, coming into the story, which we should. More investors interested, more people buying, existing investors adding to positions. But the reality is, we haven't necessarily seen that happening, because positive news seems to, be seen as an opportunity for some people to seek liquidity, because so much of that liquidity has come out of the market. Now, for us, as Keith said at the outset, having and this goes right back to the creation of First Mining. This company, when Keith and the team made the initial acquisitions, they provided a lot of liquidity to a lot of stuck shareholders, and I think that's part of what the challenge was in that 2017, 2018 timeframe. So, by virtue of the business model and Keith's backing of it, it brought an enormous number of investors into the company. But I think, there was a challenge that a lot of the people who had taken First Mining stock to acquire shares of Gold Canyon or acquire shares of Clifton Star, they'd been stuck for a while. So similar things kind of happened a bit with Duparquet with us in the last year or so. And when there's not a lot of liquidity in the market, that gets to be a challenge. So, I think that's all a symptom of the same things that we've been talking about here.
Keith, I'll give you a chance to speak on that as well before we move on.
No, I think, Dan, hit it on the nail. So, I don't really have much to add.
Yeah, fair enough. So jumping back into just really specific to First Mining, I know there's a number of catalysts that you're expecting at both projects this year. So I'll throw it to you, Dan. What are the ones that should be most exciting to investors and prospective investors?
So, I think as kind of a statement of how far advanced this project is, we're at Springpole particularly, we're very excited about getting that final environmental assessment submitted. We're targeting that for kind of middle of the summer this year. And you got to be really clear so that investors understand this. This is very different than what a number of other developers in Canada are talking about with their environmental assessments. They're talking about filing final EAs, but no regulator has actually looked at the project yet. With us, it's been a very different process, really guided and led by our environment and community team, led by Steve Lines, who a number of the people on the in attendance here today, people will have met Steve in forums like this before. We'll have him on again to kind of give us an update on where we are. But, Steve and the team did the same thing on the Hard Rock project, which they permitted over about a 6.5-year time frame. And Hard Rock, they submitted a draft environmental assessment, and it lets all the regulators ask all the really hard questions up front, so that when they are presented with the final document, there's nothing new to them. All the really difficult questions have been answered. And what that means is there's fewer surprises, and not surprisingly, the process should move more quickly as you kind of go through that submitting your final EA process. So we submitted that draft EA in May of 2022, and it's been reviewed by everyone that needs to say yes to this project. And that's what we think is really important, is we're incorporating all that feedback from regulators, from Indigenous communities, and still a little bit more of that work to do over the course of the next 6 months, but really targeting submitting that final EA. And I think that's a massive catalyst for this story, because then, there's a pretty formal clock around which we're going to see the federal and provincial process, take us to the finish line on that environmental assessment process. So we're very excited about that. we continue working with the communities around Springpole, and lots of discussions ongoing. We can't get into a ton of detail on those discussions for obvious reasons, but I think the communities have been doing an enormous amount of work that we genuinely appreciate all the work that the communities are doing. And we think that is leading to, an increased understanding of the project, and ultimately, leading us toward something that we're really aiming for, which is formalizing that relationship in agreements with the communities going forward. I don't know that we will get those signed this year, but it's certainly something that we want to make sure that we are targeting, getting consent from our communities in advance of that final environmental assessment approval. Getting the final EA submitted is an important milestone for that as well. And then there's the other work that's going on at the projects, and particularly at Duparquet, where, we've been exploring. We've got probably another 9 drill holes to come out from the work that we did in the fall at Duparquet. I was just down at the Roundup conference, and our team's kind of showing off a lot of the geology work that they've been doing at Springpole and at Duparquet, and a couple of geologists from a large foreign mining company who go around the world looking for projects, totally unsolicited, said, it's amazing what you guys have done with this project in like a 1-year time frame that you've owned it, in terms of the quality of the geologic model, the ability to target and demonstrate that you understand the deposit, and then how you're convincing people that you're going to make it grow. So, we're very excited about what's going to continue to demonstrate real resource growth at Duparquet. And then, I think we've got probably another 10,000 meters that we're targeting for 2024 in terms of drilling and continuing to show resource growth at Duparquet, as we do a couple of other trade-off studies to understand what are the real development options. So the PEA that we put out, I think, showed a very interesting project, strategically relevant. I said this before, if it were producing today, this would be one of the largest gold mines in Quebec, like the 3rd largest gold mine in Quebec. So big enough to be meaningful to really any major mid-tier company, and in the middle of the most sought after gold district in the world. So we still have some things to figure out there, but we think Duparquet is just going to continue to get bigger. And as we lay out what some of the development paths might be for Duparquet, we'll keep the shareholders in tune with that, because I think that's another catalyst that sometime in the next 12 months could really surprise people to the upside.
And Keith, I'll throw it to you for what you're most looking forward to as far as catalyst of First Mining next year.
Well, I think attitude change is really the key thing, because quite honestly, the fundamentals of the business are improving every year, but yet the share price goes down. And that has got nothing to do with fundamentals. It's only just flow of capital, as my earlier point was. When we see the attitude change and the flow of capital change, the share price will change. And that'll be the biggest driver to the move of the share price. Of course, there are other fundamental issues that are there, filing the REA and other catalysts, getting community agreements in place and so on. Those will all impact us. But still, if you are in a down market and you're in a bear market, a lot of these news releases that we put out of the fundamentals of the business as we improve the business just have no impact. And I see that time and time again. I've got a portfolio of something like 30 mining companies, and no one's happy with where our shares are trading today. But yet I look at my portfolio and everyone's exactly the same. So, you can't point at First Mining as being somehow different than any other mining company. The entire sector is underwater. And and I see great news coming from stocks in my portfolio, and the stock is down because all it does is create a liquidity event for people that are looking for a way to get out. And all of a sudden the volume spikes up because good news came out, and the stock is down. So it's very frustrating, and it's all to do with attitude. It's all to do with all just money flows. And when those money flows change, our share price will change. And that's the biggest event. And I think 2024 is likely the year it's going to happen.
No, thanks. And in the same vein, John Lewis in the chat, I just wanted to give kudos to you, Keith, for all the shares you bought in the last month in the public market. So before we get into the rest of the questions, might just want to, I know we talked about briefly at the beginning, but just talk about your participation in the recent financing and also the shares you bought afterwards.
Yeah, sure. I bought 10 million shares in the last private placement, and I bought another 1 million shares in the market. I will be buying more. It is, it's not a stock I can trade. It's not a stock I'm interested in selling. So, I buy the shares, with money that I have kind of sitting on the sidelines, and I love to buy a lot more. My goal is to get up to 50 million shares, which I told, my management knows that's my objective. I'm at 28 million shares today. If I'm not sure if I'll ever get up to 50 million, but that's the number that I would love to get. If the stock is at these kinds of prices, hopefully I'm there by the end of the year. But I'm absolutely, quite honestly, I'm hoping the stock's not at these prices at the end of the year. So, based on the fundamentals and based on what I think is going to happen in the marketplace and what's going to happen in the major markets and the flow of capital changing that will come into this marketplace, I'm expecting the share price will likely be much higher at the end of the year. But who knows? I could be wrong. We can't predict share prices, but if the shares continually to lag, and I'll be in there, on a fairly regular basis.
No, appreciate
and
that.
Also Dan, should also comment on that as well, because he participated substantially as well.
Yeah, exactly.
You can no slouch, Dan.
I bought 4 million, I guess, maybe a bit more than that. It was about $500,000 worth. And that's kind of the third check of that size that I've written into First Mining in the financings that we've done. If you look all told of, real money that I put into it, it's sort of well over $1.7 million. And that's real money. It's real money for anyone. It's real money for me. On top of that, there's even as we don't talk about this a lot, but just go back to the circular and look, last year, I took all of my short-term incentive compensation. I took no cash bonus. I took it all in equity exposure. I think people can expect that I'll do the same thing this year. And a lot of our senior team is doing the same thing. It's a great opportunity for those of us who believe, and we see how close we are to these major catalysts. I can kind of take a little bit of cash, or you could take something that I think is, a slam dunk at 5 to 10x the value in what now I think is undeniably kind of a couple of year time frame here. So that's an investment I'm going to make all day long. So, all told, I'll struggle to get to 50 million shares. I'll be honest with you, but through all of the exposure that I have, it's getting to be a significant number. And I think, pretty much the rest of our senior management team were participating in that financing as well, with real after-tax dollars. So not just in the financing. And if I had more availability, to help kind of clean things up in the market, as Keith says, we're at a point here where this is, again, I go back to that difference between your producers and your developers. That's just at, in my view, a 30-year high in the size of that gap in valuation. And I think it's got to close. And when we talk about the money that's coming back into the sector, I am convinced that the thing that's really going to jumpstart that is going to be the mining companies themselves, who are generating pretty healthy cash flows at a $2,000 gold environment, and will generate healthier cash flows at a higher environment. Those shareholders are always backward looking, right? And most of the people who are looking to invest in come into the sector, maybe come back into the sector if they haven't been in a while, that institutional investor likely needs to see a couple of quarters of cash flows improving. And financial statements that usually come out, 45 to 60, 70 days after the quarter's done. So, see what happens in mid-February when we start really seeing what companies made last year. And I think we've never been able to talk about the gold or precious metal sector as a value sector before, but it's there. And so a lot of those people aren't going to start investing until they start chasing performance, right? And the reality is gold was pretty much the best performing asset class in 2023, but gold equities weren't. And that's where, we got to remember, we had higher oil prices. We had labor inflation. We had steel cost inflation, inputs inflation. A lot of that, the inflation has kind of muted now. You're not going to have labor rates go down, but, price of oil was, trending toward $100. It's now back in the mid 70s. And, there's going to be some improvements in those margins. So I think that's in large part what's going to bring, could be some of what jumpstarts the flow of capital that Keith's talked about, is just at some point they're going to need to chase performance. And if it's not year-end performance, maybe it's Q1 performance, where people just get to realize that this is a deep value sector.
And thank you both for this quick chat. Now we are going into the audience questions. There are quite a large number, so if we're not able to get to you today, I'll absolutely make sure that the First Mining team gets those questions, get back to you as soon as possible. But I'll just get right into them. No real particular order. Question from M. Stewart. He asks, and this is for Keith, since the First Mining share price has fallen, would this not be an opportune time for First Majestic to acquire FF?
Well, if First Majestic want to become a gold company, yeah, it would be a great opportunity. I would actually love to do it. I don't know what my board of directors at First Majestic would think of that, but being the CEO and founder of both companies and chairman of First Mining, but nevertheless, I'd have to admit that it has crossed my mind, but we're First Majestic's very focused on silver, and I think First Majestic shareholders would appreciate us to remain focused on silver. When we bought Jerry Canyon, there was some questions about getting a gold asset in Nevada and so on and so forth. And I don't want to turn this into a First Majestic call. I would suggest, I saw some questions come up regarding First Majestic, and I'd please ask people, if you want to talk about First Majestic, please send an email to info@firstmajestic.com or send me a message on my Twitter account, Keith_Neumeyer, or just call the 1-800 number and ask for Mark Carruthers, and we'll answer any questions on First Majestic as we can.
No, appreciate that. Next question is from Stephen. I know we basically already tackled this when we talked about upcoming catalysts, but I think it's a good opportunity to reiterate. So I'll throw this one to Dan. But Steve asks, are shareholders going to be behind the 8 ball for the next 2 years before the possibility of upcoming milestones?
No, Steve, thanks for joining us today, and it's good to hear from you again. Listen, I think there's a number of catalysts that are coming over the course of that 2-year period. As we talked about today, I don't know that any of those individually is going to, cause a massive jump in the share price. What hitting those catalysts is going to do is certainly advance the fundamental value of these assets. And that's, in large part what we're focused on here as a management team. And that, I think, gets recognized maybe in the industry before it does in the market. And when I say that, I mean, there are a number of other companies that we've been talking with over the years about potential partnership or becoming investors in First Mining, or looking at potentially investing in our projects with us. And I think the pace of that conversation is something that, the people who control those purse strings, they know what it means to submit the final EA. And like, if you've done your homework and you've actually seen all of the questions that have been answered by regulators, what the outcome is going to be. And, we've seen all those. It's why we have such a high degree of confidence in the environmental assessment process and where we're going to get to. So, no, I don't, I would like to think that this is not completely binary, that EA process has a number of milestones in it where you're calling for community comment, and it's a public process. And so, investors will see a bunch of those questions that come back. But I think, when those come back, you'll know from the tone that, like we do, a very high degree of confidence that this is a project that's going to get environmental assessment approval. And the other part is, we continue to believe that there's a lot more, really interesting exploration to happen at Springpole, boots on the ground, near mine, in the Birch Uchi, where, we have a 70,000 hectare land package, really bona fide district scale, major scale land package, where we've already, drill tested and demonstrated at least 3 other satellite deposits and, lots of other new targets to test there. And then at Duparquet, where, I would like to think that we drill, 50 meters of 2.5 or 3 grams, and, people will pay attention to it. There's a lot of those that exist in Duparquet. Some of the historic results would benchmark well against, some of the best mines in the world. So we think there's more of those to find. It's going to continue to grow. So no, I don't think this is a, just sit and hope for 2 years, because I don't think it's as binary as that. I think, every step we take toward the finish line starts giving more people confidence that, and more investors confidence that, this is a project that they need to judge on its merits, not on what they think they know about it. And when you judge this project on its merits and benchmark Springpole, particularly, or Duparquet for that matter, benchmark these projects against any other gold development project in the world, and I will tell you, they benchmark really well. So, sometimes you just gotta prove it to people. And so the proof's in the pudding, and, pudding is on its way.
Great. A question from Timothy in the chat. He notes the Ontario government passed some new mining-friendly legislation within the last year, and he wonders if this will be helpful in permitting of Springpole.
Thanks for the question, Timothy. It's we've got a very, very supportive, very strong relationship with the ministry in Ontario. In fact, the new deputy minister of mines stopped by our booth at VRIC on Monday, so had a nice chat there. The reality is this: Springpole is the next large gold project in Ontario to get permitted. There's not another one that's anywhere close to where we are in the environmental assessment process. So we have a lot of focus, and this is a government that wants to see infrastructure develop up into less infrastructure served areas in rural parts of Ontario, particularly in the northwest of Ontario. So they know Springpole can be a catalyst, not just for, growth and jobs there, but you bring a power line up there and it opens up renewable power generation opportunities. You bring a road up there, it opens up the opportunity to continue to build a road up to the community of Cat Lake and potentially to communities north of Cat Lake that brings, not just jobs, employment, economic growth, economic opportunities, but can really drive social change in an area of the province that really needs it too. So, we absolutely are committed to helping frame out what that bigger economic story is. And from that, we get, I think, really good support through the province of Ontario and really, all of the ministries that we're working with, and we're working with them all, and we're working with them all very closely. So we've had great support. We believe we're going to continue to get great support. And where I think the Build More Mines Act, which is the name of the act that Minister Pirie enacted last year, where that can really help us is, I think, around the corners of some of the other projects that we have that we never talk about. Projects like Cameron. We've got a wonderful small mine development opportunity at Cameron. People forget there's already a ramp down 300 meters into this ore body. There's 35,000 tons of ore sitting at surface. There's we've done a little bit of scoping work, but we think it's a wonderful opportunity. But even just moving that forward, some of the permitting, for existing disturbance was more difficult, and they've tried to really streamline that. Yeah, I think from that perspective, places like that, places like Pickle Crow, which we still own 30% of, I think, to allow someone to think about maybe a smaller mine development opportunity that you could get moving more quickly using existing infrastructure. I think that's where Build More Mines Act really helps. In some senses, we're kind of at the far end of that process. It'd be more helpful if we were at the start of the process, but we're 6 years into a 7-year process right now. So, but I appreciate all the support and help that we get from the ministry there.
Oh, great.
There's also a mill at Pickle Crow as well.
There is a 200 ton per day little mill. There's tailings that have a bunch of gold in them that could be reprocessed. There's, some really interesting, potentially high grade open pits. And the deposit there is, one of the largest high grade underground deposits in Canada. It's almost 3 million ounces of resource, inferred resource. So yeah, I think it's wonderful opportunity.
We also have the option to monetize those assets as well. We still have good holdings in, 3 companies that we own with percentages of those assets. And, to finance Springpole or to finance Duparquet further, we always have the options to liquidate those assets.
Yeah, no, absolutely. And that's, I think the value that we show in our investor presentation is kind of a, look through value to the values of the underlying companies. But each of those companies like Big Ridge, companies like Treasury Metals, they're suffering from exactly the same thing that Keith was talking about in the rest of his portfolio. They're all horrendously beat up. And the opportunity is, when you have a market change, those things can very quickly be worth 3 to 5x where they are right now. So we have leverage to some of that growth opportunity too, even just in some of the projects that we might be looking to seek liquidity on ourselves.
Got a couple of questions directly for Keith, actually, from the chat. One from Joe's, I think a quick one, but he wants to know if you can reaffirm your stance on reverse splits concerning First Mining Gold.
Well, I was going to bring that up myself, but I'm glad somebody else brought it up, and I just had the power go out here. Strange. Anyways, look, my view on, I wouldn't have bought 10 million shares on the last financing if I thought there was going to be a rollback. Many of you probably know I founded First Quantum Minerals back in 1992. I left that company in 2000. Well, one of the issues with First Quantum was it didn't have enough stock outstanding, and the institutions weren't able to buy it because it only had, I forget what exactly it had. It had something like 120 million shares or something like that outstanding at the time in the early 2000s, and they split the stock 5 for 1. Today they have 800 million shares outstanding, and the stock is liquid, and institutions can now buy it. Because if they want to go buy 1 million shares of First Quantum, they can do it quite easily, without affecting the share price to any great degree. Look at B2 Gold. B2's got something like 1.2 billion shares outstanding, and there's a whole list of companies out there, whether it's in the resource sector, high-tech sector. There's many, many, many companies out there that have over 1 billion shares outstanding. Shares outstanding is completely irrelevant to me. It's the fundamentals of the business. People always look for reasons not to buy something, and people look at the stock. Oh, it's 12 cents. Why is it 12 cents? So they think, oh, it's got 800 million shares outstanding. That's got to be the reason why. It's not related. It's got nothing to do with the shares outstanding. So we'll never roll it back. Period. It's not on the table. And well, when I say never, there's never a never. If there was some very, very material thing that occurred, if a major comes in or something like that, I guess it's possible, but it's not in the cards as far as I'm concerned. I'd have to be convinced completely differently. I can tell you when I have, because I've been investing in this sector for 35 years, as Dan kind of alluded to. And the second I see one of my portfolio stocks announce a rollback, I sell the stock immediately. I don't give a shit if I take a loss or not. I'll just blow it out, because every single time I see a rollback, it's negative for shareholders. And there's very, very few exceptions to it being positive ever. There's a couple out there I know, and people point at it and say, hey, this one worked, and okay, fine. Maybe 1 out of 20, 1 out of 50 works. But in the most of the time, it's negative to shareholders. And as far as I'm concerned, it'll never happen.
I appreciate that. I got one question for either of you. You can both tackle it. It's from Mario. Notes that you're trading at about $6 per ounce in the ground, and he wants to know what it should be instead.
Well,
let me touch on that just for a sec, Dan. Okay. Generally speaking, if you go back 20 years, gold trades for something in the order of $25 to $50 for a development project. This is a 43-101 compliant gold ounces in the ground. During a bull market, if you go back to 2011, 2012, gold ounces in the ground got up to about $100 to $150 an ounce. And they dropped to 2015 levels when we put First Mining together, and we were buying gold ounces at $8 to $10 an ounce. And then they moved up, in the rally that happened after that. And I forget exactly, but it probably got up back up to the 20s in that range. And today, as you said, we're trading in the 6s. So, Dan, you go ahead and add to that if you wish.
Yeah, no, I think those are right in the ballpark of the numbers that, as a guy who provided fairness opinions, did valuations on mining companies and a lot of comparable analysis, I can tell you over cycles, advanced stage developers, junior developers, well pre-permitting would be at that 25 to 50 that Keith talks about. Advanced stage developers would tend to trade up $50 to $100. And ultimately, those projects were usually, at the time that they got acquired by larger companies that were going to build the projects or got their permits, it would be in excess of $100 an ounce. And often, if you're looking at reserves, they'd be acquired at $200 to $300 an ounce reserves. Now, that was when the gold price was $1,000 or $1,200. When you're talking about more margin, I think you could see those numbers go higher. So, yeah, we have a couple of slides right in our presentation that kind of shows where, the advanced stage developers, do and should trade, which is, somewhere between 0.4 and 0.6 times that net asset value. So what we think of as the NPV value of our projects based on our pre-feasibility studies, our preliminary economic assessments. With that, the company's got, I think, in excess of $2 billion of asset value right now. And those are actually based at $1,600 gold and $1,800 gold for Springpole and Duparquet, respectively. So, one of the things that's critical to understand about First Mining, and one of the reasons why when you're making your investment decision, the thing you really want to key in on, if you're looking for deep value, is not just what's your entry point. So an entry point of $6 an ounce is phenomenal for advanced stage projects in tier 1 jurisdictions. But then what's the leverage to the increase of the gold price? Because we kicked this off saying, I was saying 23 to 2,500, Keith's saying 3,000. We can't, won't tell you the time frame. But every $100 in the gold price is 250 million US of fundamental value accretion to our asset base. Just for the quick math, that's 3 times our current market cap in fundamental value for every $100 in the gold price. So, it's not inconceivable when you start running these numbers at $2,500 or $3,000 gold. Now your costs will adjust. Yeah, sure. But it still gives you that order of magnitude leverage to the gold price that is multiples of your initial investment. And that's where, coming back to the point of when the capital comes back into the sector, there's going to be a real rush to find advanced stage projects, which, by the way, because there's been no capital for 10 years, not many people other than us have been able to advance projects, right? And we've done it because we've been able to be creative, because we had the portfolio that Keith and the team put together, because we got the backing of a number of the shareholders on this call, people who've been with us from 2015, 2016, and believe in the long-term fundamental value. And we're willing to, to take our last financing as an opportunity to average down. I mean, it was, it really was, well, there were a couple of new investors. It really was existing investors that carried the bulk of that financing. That, I think, just gives us real confidence that when this sector turns, you have everything in place here ultimately to cause what should be a feeding frenzy on this stock, right? because it's so undervalued right now. But you have to, I think, look at it as having, a time frame that you're willing to wait for some of these catalysts to come. We're confident in delivering the catalysts that are ours to control, or at least influence. You can't control the government, but some of these important catalysts that are coming here for sure. But if you have, call it a 3 to 5 year time horizon, and you believe what we believe of where the industry is going, and the capital is coming back in, and the company's going to advance, and we're going to make our projects, bigger and better through exploration. It's just you can tell we believe it because we're voting with our own dollars, right? So I think it's an unbelievable opportunity for really exceptional share price appreciation here if you can have a bit of capital and a bit of patience.
Appreciate that. Next question, I'm going to use it as an example of many similar questions that I see in the chat. This one's from John Lewis, and please just answer the best of your ability. But he's curious how much outside interest you're seeing in First Mining from bigger players, either to JV or to do an outright buyout. He's looking to know just any information you can give on that topic.
Well, obviously we can't give much, John, as you know. Most of these discussions are governed by confidentiality agreements. But I would say this, we recognize it's a really important part of our marketing of the work that we're doing is actually us marketing to the industry. And that's very important to make sure that the industry is watching and understands, because industry participants can kind of dig deeper, right? They can see confidential information. They can, really dig in and understand our perspectives and have their own perspectives on, where the assets, how they're going to evolve, what we think the economics are going to be. So, you can rest assured that we aim to have those discussions with most of the larger gold companies in the world who are aware of what we're doing, and some follow with more interest than others. But we've had real work done by a number of larger companies, and most of them at this point, I think are looking for the same kind of catalyst that investors are looking for from First Mining at this point. So the one thing on that front, and it's starting to change now, but and Keith can maybe talk about it a bit of the pressures from shareholders that he faces as well. But, a lot of those companies have been under pressure to kind of return capital to shareholders. And every mining company returns capital to shareholders at the expense of adding to their own reserves and resources, right? By definition. So I think that's starting to change. You're starting to see more mining companies making strategic investments. You're starting to see, I think you're going to see more producers looking to add later stage development assets to really build out their pipelines, because they haven't had a lot to be able to do that lately. And, I think that is going to be a major theme for 2024. A couple of consolidation transactions where bigger mining companies buy some bigger projects that could also recycle, $500 million, $1 billion back into the industry to look for the next opportunity. So I really think that's what kickstarts the flow of money coming in. That's going to be the first 2 or 3x return on companies like us and on like Big Ridge and Treasury. It's going to be the industry participants, I think, that are, either by buying other companies and freeing up capital to come back in. That's where I think we're going to see some of this bump. And I think this is the year that it happens.
Well, appreciate that. Out of respect for time, we only have room for a couple more questions. The last one I'm going to ask just before we get into you guys summarizing today and why people should consider First Mining as an investment. Curious question for Dan is, where should people reach out if they have more questions following this event?
Delighted to have you reach out. Everyone on the call, most people know Paul Morris already, but can reach out to Paul. You can get to him through info@firstmininggold.com. I think it's paul@firstmininggold.com as well. And yeah, Paul's exceptional at getting back to people if you want to kind of contact directly. And otherwise, our website is a great source of information, www.firstmininggold.com.
Awesome. Thank you. And I'll throw it to Keith just to wrap up. Just your summary of why you think people should consider First Mining as an investment today.
Well, as I said, I think it's a sentiment trade, and we've been in this long bear market, and bear markets end, and when they end, we see multi times movements in the mining sector, and what that means, and when that happens, you can never, we can't speculate. None of us have crystal balls, but I can tell you just from experience that if we're not at the bottom, we're like in the ninth inning. So. Picking the exact bottoms is a loser's game. You'll never do it. As in picking the tops of anything, you'll never do it as well. But, for investors, they need to go after decent management teams, good management teams that are working hard, bringing value to shareholders. And I think First Mining brings everything to a shareholder that's necessary to create value for the future. Putting times on that and quantifying that is impossible, and even if we wanted to, we're from a regulatory perspective, we're really not allowed to say very much. So we can tell you how we feel, and we can tell you what we do, and tell you all the great things, but it's up to investors whether they want to buy the stock or not. And I personally put my money behind my where my mouth is, and I think it's great value, and I hope people that are listening to the call today agree with us. And if they have doubts, please call the company, please talk to Paul, and if you have additional questions, he's a value of information. I would suggest people talk to him.
Thanks so much, Keith, Dan, gentlemen. Thank you for all your time today, and everybody in the chat and who was willing to join us today. Thank you as well. Again, if we didn't get to your question, I know there were a number we couldn't. We'll make sure the First Mining team gets back to you as soon as possible. And this event will be recorded, so please do share with any friends, colleagues, family you have. For everyone else, have a lovely afternoon and enjoy the rest of your day.